It's time to get back to work. Back to work tonight. Boy, time flies when you're having fun, making some money. I know a lot of you guys made some pretty good money today off those beautiful bull traps, those crown reversals that we talked about in last video. So well done on that. But let's get back to work tonight. Refocus. We got a big day coming tomorrow. We get some big news on the schedule tomorrow morning. We get some beautiful ranges. You know I love range-bound markets. Got some breakouts. Got some failed breakouts for tomorrow. I have a lot of great trades I'm tracking for Wednesday. And we got some big earnings tomorrow night, so I'm excited for tomorrow. You should be as well. I'm going to cover my favorite trades in the video tonight. That way you guys have a game plan to make some moolah on Wednesday. Now, before we jump in and get our hands dirty on the charts tonight, got a lot to cover in a very important video. Before we get started though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And if you enjoy these videos tonight, as always, thank you for tuning in. Make sure you hit that like button for me and give me a shout out, give me a holler, introduce yourself down in the comment section below. All kidding aside though, great to have you with me here tonight. Thank you for tuning in and supporting the channel. But enough of the intro, Joe. Let's make some money on Wednesday. Starting off tonight on the 60-minute chart, the hourly chart on the NASDAQ and the QQQs, the E-mini and the SPY. I'd like to use the hourly chart, the 60-minute chart, to help me plan my favorite trades for the following day. But then we'll do later on in the video, we'll drill down to some faster time frames, some tick charts. Tick charts are much more effective at timing the best entries. So we'll start tonight on the 60-minute, but we're going to drill down and talk about specific entry tactics later on in the video. What is happening on the 60-minute chart on the S&P and the NASDAQ? There are two key components you want to be aware of on the 60-minute. Not a lot has changed since last night's video. We still have the first component, of course, is that strong move down that we saw to finish up last week. Remember, anytime we see a strong move in one direction in a trending market like this, we expect a deep pullback, and the sellers are trying to retest that low. So we are in both the NASDAQ and in the S&P right now. We are nice and high up here right now, giving sellers a lot of opportunity to sell short. And we know exactly where these bears want to go. They want to take out that low at 43.5 or 43.50 on the S&P and that 14.609.25 on the S&P. So we know exactly where these bears want to go. However, I will say, you'll notice the second component on the 60-minute charts here tonight is we're sitting at some pretty good support here on both sides of this trend line coming up on the S&P, and of course a prior swing high acting as potentially support. Really, there are support levels on both the S&P and the NASDAQ right now. Now, keep in mind, we're still pretty bearish overall, right? I mean, look at that bear move down on the NASDAQ. Look at that bear move down on the S&P. But I'll tell you, if we're going to get a reversal, this is probably a good place where it may happen right now. Now, the buyers, they have some work to do, but we'll definitely be talking about how potentially a jump off that trend line on the S&P, a hold off this prior swing on the NASDAQ, and how we might be able to get into something that might squeeze here for tomorrow. So those two components are on my radar. Now, before we drill down and talk about the entries I'm looking for tomorrow, why don't we take a look quickly here at the schedule for tomorrow. There are really two things that affect us here tomorrow. One, of course, is the block of news at 9:45 and 10 o'clock news. As you'll always hear me say, anytime there's major red star news around 10 o'clock Eastern time, you want to pay attention. We've got PMI composite flash, which is probably going to be the bigger headline number tomorrow, but it's right on top of that 10 o'clock top of the hour. So that's definitely something that you want to have on your radar for a catalyst here tomorrow. And as I mentioned in last night's video, we also have some big earnings. We have the big NVIDIA earnings coming out after the close tomorrow afternoon. We'll talk about this, of course, tomorrow night in tomorrow night's video. But whenever we have some big earnings reports after the close, we just have to be careful, towards the end of the session. We saw some pretty good setups late in the session today. I know a lot of you guys grabbed that crown reversal pattern on the S&P and NASDAQ. That's going to be a little bit dicey tomorrow. tomorrow afternoon. Remember, this NVIDIA earnings, the last time we heard from NVIDIA, they sparked this huge bull rally, if you recall, a few months ago. So you have to assume people will be kind of battening down the hatches and protecting their capital ahead of that NVIDIA report coming out tomorrow evening. We'll talk a lot more about that tomorrow night on the video. So those are the two key aspects coming into my radar for tomorrow, 9:45, 10 o'clock news. That's the most important factor on my radar for tomorrow morning in our trade room. Now, back to our charts though, because the money is made, of course, on the charts. Let's go over now my favorite trades here. We'll start with the SPY in the E-mini. We'll go over the NASDAQ and the QQQs as we get deeper into this video. Now, as I mentioned before, we've got that strong run down here for the bears. They're trying to pull this thing back and retest the low. Our directional bias right now is certainly very bearish, but will these buyers be able to hold off that trend line and potentially make a run up into the underbelly of that range around 4,500? We can definitely see that 4,480 area is just begging to get hit. That's a big if though, if the buyers can get their act together here ahead of earnings or maybe after earnings tomorrow. Now, let's drill down to our tick charts. This is a 7,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, this yellow line is the 21 EMA if you're tuning in here for the first time. As you guys learn in my free trading classes, tick charts are superior for finding entry patterns and entry setups. They're better for pattern recognition, which is why I use them every morning in our trade room. What's the most important factor we have right now on the tick chart for the E-mini or the SPY? It's pretty simple. It's a bear market down into a trading range. Now, whenever I see a bear market into a trading range, there are 3 points of interest that you want to keep in mind. One already happened. It popped up. Sellers look to sell above prior swings into resistance above that trading range. Ranges act like magnets. So when I have a bearish move like this into a trading range, it's very easy to assume that sellers will be waiting to short any area of resistance. And again, this was a crown reversal pattern or a bull trap, as we talked about in last night's video. So again, this is kind of the initial point of interest, is selling at resistance above the high of a trading range. There are 2 more points of interest though. The next one is what you call a breakout pullback, a breakout pullback. So ultimately, we expect price in a bear market into a trading range. The bears have come in. They've clearly sold off of that high already with that trap entry. Now we should be going lower, and bears will then start looking for the underbelly of that trading range to act as resistance for another round of selling going lower. Now, I also like to look for long trades during that pullback. So these are the 3 points of interest that you want to look at in a bear market like this into a trading range. Again, it'll be bull traps and buyer failures. We talk about those in our free trading classes, right? And then again, as we go lower, that breakout pullback. And again, we'll talk about how to structure the entries on these, how to buy off that low, how to sell that breakout pullback. So let's go into more detail here now. Let's talk about how to make money on those 3 points of interest. Later on in the video, I'm going to talk about going lower because I think there's 2 really great ways to make money on that breakout pullback, both long and short. I'm going to cover that a bit later on in the video. And the reason why we'll do it a bit later on is because, again, we have some pretty good support levels here, both on the S&P and the NASDAQ. Now, here's one question. If we run higher here, can I still short this thing off the top of that channel, right, off a prior swing? I can. But what's my concern, though? It's not that support level on the 60-minute. It's the fact that we should be going lower, right? This is a bear move into a trading range. We've popped up, and we're now what's called rotating off the high. We should be rotating back down again. Now, imagine we open up in Asia or in Europe or in the US session tomorrow morning. Imagine now we don't complete that rotation, Okay, imagine now we end up popping higher here. This is a very, well, it's a very interesting clue for the buyers. It's a punch in the gut for the sellers, and it gives the buyers a great chance to make a run back up to take out those highs. So let's talk about how do we short that move, and also how do we buy it as well. The short side is pretty easy. Inside of our free trading classes, I talk about what's called a failure pattern. Now, if we fail that rotation and run higher, that's a pretty what? It's a pretty bullish clue. It's definitely not a bearish clue. So I still like the idea of being a seller up there because, again, we're still overall bearish on the 60-minute. It's a great looking hidden channel, some fresh area overhead for new bears enter the market. But I have to expect what? I have to anticipate these buyers are probably going to try to make a run. Let's let those buyers get in a little bit, and let's try to use their stops as fuel for a run back down, right? One of my first mentors, the extremely good advice. Look for ways, he would always say, look for ways to use stops as fuel to turn this thing back down again. So imagine, again, I teach this in the free trading course, right? Let the buyers try once, go lower, let them try again, and let's see if we can run those stops for a run back down to retest a low. Now, a lot of times, this turns into what we call a failure into pullback combination. These are two patterns you guys are learning in the free trading course, right? So again, up around resistance, range below us, but again, failed rotation, a big red flag. Let's give the buyers the benefit of the doubt. Let them try a couple times, use their stops as fuel, right, with a failure pattern, and then try to grab that pullback as we what? As we make our way back to retest the low, and as we make our way down to where a pendulum swing. The amount we go above the range is then built up right down below the range. Target off, you should take half off at the low of that range, right, and half off bottom of that pendulum swing, right? That's a pretty easy one. Now, here's the big question. How do we know if we can buy this? That's pretty easy. If it ends up popping and grinding, okay, that's the giveaway. If it pops up and it begins to grind, right, it grind like that. If it pops up and grinds going higher, you'll know this when you see it. At this point now, it's a mad dash getting in before we retest those highs. I'm looking for, you know the answer to this, right? What's the problem up here? The problem is I don't want to what? Chase it. I don't want to buy high. Right? Why? Because it's a bear market overall. Who's waiting up here? Bears are waiting up here. How do we avoid buying high? We buy traps, right? We buy traps, right? You know this. I gave it away. We buy traps. That's the giveaway, right? If it, again, it'll pop up. It won't pull back in buyers, right? It won't pull back like that. What'll happen is it'll pop up. It'll feel like the sellers are walking away, which causes that grinding motion on the chart. And oftentimes these will line up with a beautiful trend line off that high, off that low, right? We call these trap setups. I teach these all in my free trading course, which if you haven't taken that free course yet, if you're not making consistent money right now, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be that day. And most importantly, you'll learn my 4 favorite entry patterns to help you start making money on your own. You'll love that free trading class. So grab the link in the upper right hand corner, take that. If you're tired of missing the best trades, that will get you on the meat each day. And don't forget, I'm going to put all the important links we talk about tonight. I'll put everything down in the description of the video. So if you need more help, you can get more information down the description. So now we know more about how to trade this thing as it goes higher, right? Now we know how to short it, and we also know how to tell when we're looking for the long side trades here too, right? All right, now the big question is, as we go lower, we've talked about point 1, right? Point 1, point 2, and point 3. Now let's talk about flushing out point 2 and point 3, because that is definitely something we should have on our radar. Let's go to the NASDAQ now. The NASDAQ is very, very similar to the S&P, although I would say the NASDAQ has served up this reversal on a silver platter for the buyers right now. Again, let's not kid ourselves here right now, right? That's a pretty bearish move down on the 60-minute. It makes perfect sense to get a nice deep correction to give the sellers some meat on the bone as they try to run this thing back down to retest a low. But if you're a student of mine, if you've taken my free trading classes or you're a member of our trade room, you know we like to use the 21 moving average. The 21 moving average is a very good giveaway or very good clue as far as who has control of the market. You'll notice, for example, right, the bears are separating off the moving average. Notice the bears are jumping off that EMA, and more importantly, every time we get back above the moving average, what happens? The buyers are nowhere to be found. We call this holding the moving average. So the bears have been doing a great job the last 2 weeks, right? I mean, look at it. Every time it gets above the moving average, 21 EMA, the buyers are failing. Every time it goes below the moving average, it gets whacked, right? Again, the bears are holding the 21 EMA. Now, look at the bull side now. This is starting to show some signs of life for the buyers. That's why I said earlier, if we're going to get a reversal, right, it's being served up right now on a silver platter for these buyers because they get a nice deep pullback. Look at the separation off that 21 EMA. If they're going to get a reversal, it's going to happen here probably tomorrow or after that NVIDIA earnings here tomorrow night. Now again, right, we're not a bull market yet, but it's certainly looking like the Nasdaq is ripe for that squeeze. We'll see if we get it or not, right? I won't hold my breath. I won't hold my breath because, as I mentioned this morning in the trade room, we still have that strong move down. Strong moves love to pull back and retest that low. Anyways, let's drill down out of the tick chart. I thought that was interesting here on the 60-minute chart. Use the 21 EMA. It's a fantastic tool. Look at this one, right? Look at this one right here, right? Every time we get above the moving average, what's happening? It's getting whacked back down, right? They had that beautiful push higher and they couldn't even hold it above the 21 EMA. Now, this will look very familiar on the Nasdaq, right? There's one very big component here on the NQ and the triple Qs. It's a bear market into a trading range. And as you guys know, ranges love to rotate, right? So we go up, another one of those bull traps we talked about in last night's video. They were everywhere as the day developed here today. But again, bears are in. Right, we have to assume that bears are in, and they should at this point be rotating back down again and looking for that breakout pullback. Same game plan we talked about a moment ago on the S&P, right? If we do end up going higher, we look at this as a big punch in the gut to the sellers. It's a big failed rotation. This is that big level of support I was talking about on that 60-minute chart a few moments ago. So if we do go higher here, we are looking for, again, anticipating buyers are going to throw the kitchen sink at this. Let them try a couple times, rope them in, and use those stops as fuel back down to those lows and get potentially that pendulum swing all the way back down, right, rotating on the opposite side. Again, if it pops and grinds, right, then we look for traps on the way back up to take out those big highs overhead. Let's get down to business, though, on the move going lower. Okay, now I know a lot of you guys are going to know the answer to this already, but if I want to buy down here, right? Remember, think about this. Breakout pullbacks. If there's one thing you take away from this video, write this down. This is a very common factor. We saw a bunch of them last week, week before that. We love this in our trade room. Bear market into a range, breakout, pull back, and use the underbelly of that trading range. Now, keep in mind, this is an overall bear market, okay? Remember, context is a very important part of trading, okay? That's why some trades win, whereas the same trades lose, right? It's all about context. So what is the context right now? The context right now is we're bearish on the 60-minute, okay? That is the context that allows me to be confident in the way these patterns are going to work. Okay, if this is a bullish 60-minute, right? If that's a bullish 60-minute, this does not work very well. Okay, it can be the same exact pattern, but in different context, it's not going to work the same. Okay, it's very, very important to understand context is important. However, when you have a bearish 60-minute and a bearish trading range like this is the sequence that we want to look for. So I think we could. I think there's probably money to make if we go lower in buying that pullback. The hard part is this: in a bear market, it can be very difficult to tell when that pullback's going to happen, right? It can be very difficult to pick the bottom. I got a pretty good idea where I'll start looking for one, right? That pendulum swing off the high down to that low. Something similar is there on the S&P. The S&P is almost the exact same kind of calculation. It's a little bit different, obviously, but same basic idea. So we have a general idea of where we look for that move going higher, but I don't know, right? It could easily keep going, right? It's an overall bear market. We can't just blindly buy that low. So remind me, if you watched last night's video, if I want to be a buyer at a support level in a bear market, what's my problem? What's my problem? Remember, there's always a problem, right? Remember the two variables? Remember these before? Location and momentum, right? You always have to ask yourself these questions. How is location? It's good, right? Because we'll be at support, right? We've got a pendulum swing. It's a good spot to be a buyer, right? It's a good spot for it, but that's all it is, right? That's all it is. Momentum is not very good. We're long-term bearish, right? We're short-term bearish. So again, trying to pick that bottom. What's my problem? My problem is the bears, right? The bears are going to be here trying to keep this thing going lower. So if I want to be a buyer on this and I want to get a good winning percentage, right? I'm not in the business of getting lucky, right? I want to get lucky. I want consistent returns over and over again, right? I don't want surprises. I want consistency. So the way you get consistent winners in these situations is you need two things. One, you have to trap in those bears, right? Because think about it. The bears are going to come in and they're going to try to whack this thing on a breakout pullback. Okay, it's almost guaranteed. Okay, so anticipate those bears are going to throw some bullets at this low. Okay, now what's the next problem? In an overall bear market, as we go higher, who's waiting up there? More bears, right? More bears, right? As it goes higher, more bears are waiting there. So the two things you want to think about when you're trying to pick a bottom like I'm trying to do here on this crown reversal is we have to rope in the sellers, right, to use their stops as fuel to turn this thing around. At the same time, we got to buy as low as we can because if we buy high, we're buying what? We're buying right into the bears here. This is where a crown reversal pattern comes in handy. Okay, I gave it away earlier, right? We talked about this a lot last night on the video. We're very bearish going lower right now. So again, anticipate those bears coming in and throwing some ammunition at this move going lower. They want to keep this party going lower back to those lows on the 60-minute chart. And again, in a lot of cases, for example, if this was a bullish market, right? If this was a bullish market into a trading range, remember how important context is? If this is a bullish market right now, I don't need to buy low. I can use a simple two-try failure to buy right into stops, right? Does that make sense? Okay, give me a hell yeah down in the comment section, because if you understand this difference, you are a mile ahead of your competition, and it's all a big competition in the markets, right? We're all competing against each other, right, to pick each other's pockets each day. If it's a bull market, right, what's the problem now? No problem. Right? It's great location and great momentum. I can be more aggressive, right? But again, we're not in a bear market, right? We're in a bull market. We're a bear market right now. So as we roll lower, I have to anticipate now, rope those bears in, get them to try twice, and ideally, really ideally, I need to get that bear trap for that run going higher. This could be a very lucrative trade. Oftentimes when you catch traders on the wrong side below trading ranges, the opposite side of the range is a great place for a half-off target. The next swing above us, obviously, pendulum swing, right, on the opposite side is kind of the big objective, right, half off there, quarter off, right, up here, right, quarter off, up around here, right? These can be very lucrative runs in the opposite direction because, again, that range is going to want to rotate back and forth like that, all right? So as we go lower, right, as we go lower, there's one pattern really I'm looking for tomorrow, and again, I could be a lot more aggressive on this, but the goal is not to trade more often. The goal is to take the right trades to keep your winning percentage nice and high. Again, it'll be a crown reversal or nothing more than a two-try failure pattern with a bear trap right on the entry going higher. The key is the bear trap. Okay, the key is the bear trap. It may end up going like this, right? More aggressive like that. Just wait for that bear trap. Okay, you want to buy as low as you possibly can. That's the key here on this. Now, let's kick this out, get rid of that here for a second. Let's say we get that strong run down. We get that crown reversal, right? And now as we run higher, I should mention this earlier. I should have mentioned this earlier. If we get a larger breakout going lower like this, the underbelly of that trading range becomes a certain level of resistance. That becomes that half off target, right? Half off, quarter off, right? And then probably quarter off right up there. So if we do make a big breakdown, creates more separation off the underbelly of that trading range, we have to assume now the bears are going to come in to whack this thing back down again. How do we short that now? How do I short it? Well, what's the problem? Right? What's the problem? The problem is that this range is a magnet. It's going to try to drag this thing back up in. So knowing that's the case, but also knowing it's a good spot to sell short now, what I'll do is I'll wait for those buyers to try a couple times. Almost the exact same game plan we had here with that 2-try failure into that pullback combination we talked about earlier on the E-mini and the SPY. It's literally the exact same game plan here. Wait for that pop up, get into the underbelly of that trading range. Excuse me, let those buyers try twice. Again, let them try to run this thing going higher. The more they fight that, the more of their stops are just waiting to get run, and you can sell right into their pain, right? Right into where those buyers are going to throw their keyboard across the room because they got caught, right, chasing a breakout pullback. The target on these is pretty simple. It's back to retest that low, right? That's a pretty easy target, back to retest the low. As I do in my trade room, I always go for at least 3/4 off, right, of the position at that low, and then leave a quarter of it to run, because oftentimes what happens is this leg down becomes the breakout leg, right? Measured moves, and that measured move, right, makes sense? Okay, that becomes the next runner target. So now that you kind of know about how to find the entry, again, the crown reversal to buy it up, and the 2-try failure roping those buyers to roll back to the low, once you know how to find the entry, the next step then is just look for, okay, we know we want to get the majority of that position off at that low, because oftentimes it'll bounce, and you want to make sure you get the big chunk of that profit off, cash that paycheck, move that stop down to point of entry. Don't let that thing bounce back up into that trading range. But again, the size of that first leg, okay, we always say, right, the breakout leg is the measuring leg, right? So the breakout leg is the measuring leg. Once we know how big that leg is, then we can pin it upper in the deepest part of the pullback, and that will give us now that measured move, and that will be where that final quarter will come off as the runner, all right? And usually once we get that 1 leg, 2 leg, that's usually when we start seeing reversals, consolidation into a new trading range. Hopefully tomorrow we'll get all the way down there for us before those NVIDIA earnings come out, and can it grab everyone's attention tomorrow afternoon. All right, so that's the game plan, right? So now we know those 3 points. Okay, it's very, very common. Bear market into a trading range. Point 1 is that short at resistance above the high. Point 2 is that, again, pendulum swing, support levels below range, right? Point 2 is that pullback, and point 3 is that breakout pullback as we go. We never know what we're going to get each day. All we do is keep an eye out for these 3 points. I'm sure the market will throw some curveball at us, right? We are going to be trading together, though, tomorrow morning in our trade room, 8 o'clock Eastern time, and we'll roll with whatever curveballs we get here. Now, come out and join me tomorrow in our morning trade room. I'll put all the membership links. I'll put all the free class links. I would definitely recommend start with the free classes first. That'll get you going. Learn the basic strategy. That'll keep you warmed up and primed and ready for trading with us as a member and a student of our morning trade room. All the links are down in the description of the YouTube video. If you have questions or you need help getting started, whatever the issue may be, don't be afraid to call us here in the office. We got live chat on the lower right-hand corner there as well. So don't be a stranger. Keep in touch if you need help along the way. In the meantime, let's wrap it up here for tonight. Great video lesson. Hope you learned a lot. Hope you use this knowledge to earn a lot tomorrow. If you need me, you know where to reach us, and I'll see you tomorrow morning in the morning trade room with all the members. If not, same time, same same place tomorrow night. We'll let the earnings come out from NVIDIA and put a game plan together for what should be a very busy Thursday trading session in tomorrow night's video. All right, guys, I'm out of here for now. Be well, be nice to each other, and better be here next time. Adios, amigos. Bye-bye for now.